Hey folks, Dan Frio here, the Mortgage Update. Today is August 26th, 2020. So let's get on to what happened today with rates. Not too much, which we like that, but I want to clear up a lot of confusion that you might be seeing on the internet, seeing from different YouTube videos, as well as myself. Rates have been moving, changing, fees have changed. There was that infamous 1.99 rate that came up recently. So I want to go over some questions that probably most of you have, and that's what we're going to do right now. So let's get to it. What's going on with today's rates? Well, MBSs are up 3, which is good. I'll take it. We've had too many red days than we've had green days. Why do I like the green days? Green is good. Green means rates are going down. It's good news. Red is bad. Red means rates are going up. That's not good news. So that being said, this number here, what does this number represent? So those that watch me every day, thank you. And I'm sorry to go through this every time, but for the newbies, I'll go through real quick. This is what's happening to the bond. It's called a mortgage-backed security. It's a cluster or a whole composition of mortgages looped into a bond sold as an investment. This is what's happening to the price of that bond. Prices and interest rates or yields have an inverse, a flip-flop relationship. So as the price goes up, you pay more for the bond. That means you get a lower rate of return. That's good in this case because we're borrowing money, so we get a lower interest rate charged to us, a lower mortgage rate. So that's the easiest way for me to explain that. All right, so we love the green, and the greens have been really taking control for a long time, but now we're starting to kind of hit some resistance levels. And I've been predicting for the last couple weeks, last week or a little bit over a week, that we locked in our clients right through here, which was perfect timing because I thought we were going to get a pullback into this area and then into this area down here with a resistance level here. So why? Why am I saying this and I'm not just pulling out of thin air? Well, there's a whole bunch of analytics in here, believe it or not, that you might not even really recognize. You might see this and say, okay, it's just a candlestick chart. Well, yeah, but there's a lot of other stuff here that you probably aren't really paying attention to. And let's just go over here just so you could see it a little bit better. This line is a ceiling. This line is a ceiling. This line is a floor. And this line is a floor. These are called Fibonacci levels. Ceilings, floors, short-term, long-term, okay? So in the long-term charts of trading, you're going to get fluctuations that should go into these areas here. Short-term, it should go into these areas here, okay? And that's what we're watching. Now there's more lines in here. There's this line here. There's this line here, and there's this line here. So we should be trading between these areas, which we are. Then we bring into these lines. These are a 25-day moving average. These are averages. 25-day moving average, 50-day moving average, 100-day moving average. All these are important. So when we kept hitting this ceiling here, hitting resistance, and we hit it, stopped, hit it, stopped, hit it, stopped, exceeded it, came back, I'm like, oh boy, we got to do something here. This is going to be a reversal in the market. And we saw that. And I said, in a normal market, we should be kind of trading between the floor and the ceiling. Okay, so we should have been trading in here, which we did. We came back into those levels. But then we also have these 25 and 50-day moving averages. So I'm saying, okay, we also should be trading between those as well. That's another resistance level where we could get to. Look where we're hitting, and we're hitting resistance right here. The next trend is getting down to the 50-day moving average, is down here. Again, guys, as this is moving down, rates are moving up. I'm watching this for you. So if you're a new client, I haven't locked you, we're having a resistance here and we're staying there. I'm assuming, or I'm hoping, or I'm expecting that we stabilize between this area right here. Okay, right in this area. So I'm not predicting any big move. Okay, Here's one thing to watch for. Here's what a lot of people have been saying. They're like, well, the Fed came out the other day and they said, because of the pandemic, we're really not going to change rates for the next 2 years. Bullcrap. Sorry, I would have said the other word, but I don't want to offend anybody out there. They don't know what's going to happen. They're almost like weathermen to a point. One big thing that's being watched right now is inflation. And if inflation starts to run out of control, which it possibly can do and might do it because of all the stimulus spending, you're going to see the Fed move in, and not 2 years from now. So I'm not trying to be the bearer of gloom, but it's not like, okay, we're not going to do anything for 2 years. Well, they might not do anything for 2 years, but they might also do something. And we're going to have some news out from Powell. He's the Fed secretary, the head of the Fed. He's speaking this week sometime. It might be tomorrow or Thursday at a conference, and they're going to give us a little more guidance on how they feel about, is inflation a big trigger, or are they just going to do anything and everything just to keep rates as low and as long as they can? So we're watching for the wording of all that information to come out. So that's basically the trends going on right now. I don't really see any resistance here. We should be pretty stagnant for a while. Here's a newsletter that I share every night, and I wanted to go through this, and I'm going to blow this up so you can see it as well. Just going over some of the things, the confusion out in the market right now, and I'm just going to go through a series of questions here or things that have been posted, and I'm going to answer those for you. So recently, a lender came out and said, we can give rates at 1.99%. Great marketing tool, fantastic. I posted just a snippet of their caption, and I got 10,000 views, like bam, like fast. And it's amazing how, people hear about, the Federal Reserve, they're dropping rates. It might be zero and so forth. And then people think that, I can get a mortgage at zero. You can't. The best way I can explain this is if it sounds too good to be true, it most likely is. And I was just quoted in Yahoo Finance and MSN News. And I made a comment that got picked up by all the news channels is, my recollection of some of this, especially in the 1.99% article, was, you look at that and say, are you kidding me? Rates at 1.99? I equate that to driving home this evening and seeing a gas station that has gas for 50 cents a gallon. You're like, it can't be possible, but I'm going to pull in. Then you get in there and you have to buy 4 pizzas, 2 cases of beer, a carton of cigarettes, and a car wash. Okay, that's how I get 50 cents a gallon in gas, because I just spent $100 in other crap. So that's what happens with that. So if it sounds too good to be true, please, guys, look into it. And I always say, even when I go through my rate comparisons, read the fine lines, read the fine print on all this stuff. The next thing I want to go over is there is the FHFA came out, and that's Fannie Mae and Freddie Mac. They came out and said they're going to start charging a 0.5 point on all refinances. All right. So when they come out and say a 0.5 point, it's a fee. It's not a 0.5%, like a 0.5% of an interest rate. It is a 0.5 point. So it's 0.5% of the loan amount. It's not associated with an interest rate. If we equate that into interest rates, it might be the difference of 0.125 or 0.25 to your rate. So that's creating a lot of confusion, and that's what's addressed right through here. So what they did is they came out and said, if you're refinancing, we're going to charge you a 0.5 point or 0.5% of your loan amount, okay? And that's a fee. It's not part of the interest rate. You can get a higher rate to absorb that fee, okay? So just to let you know that part of it. Well, what happened is they came out yesterday and said they're going to postpone that until December. Well, good and bad news. If you locked, which we didn't lock anybody during that duration, you're basically beep out of luck in most cases. So if you locked in the last couple days, check with your lender to see if they put that cost in there. And if they did, would they waive that for you? If they don't, call me. because we didn't lock anybody in with that fee. So most lenders are saying, you know what, too bad. We locked you in. It is what it is. Others, you can probably negotiate it. And but if they won't, basically they etch it in stone and say, no, we're not going to help you. Give me a call. I'd love to help. And then right now, should I lock? Our rate's going even lower. Guys, if I knew that, I post this every day to give you trends, give you my guidance, give you news that's coming out and all this other stuff. If I knew for sure what was going on, I would be either rich or I'd be in jail. So that's the best way I can put that. So that is it for today's the rate update with Dan Frio. If I could be of any help to you, the best way to get a hold of me is, let me pull it up on my screen, is go to therateupdate.com. Let me put that up on the screen right now. This is my website. To reach me personally, you can call 844-775-LOAN. It's 844-775-5626. My name is Dan Frio. If you'd like to reach me via email, just reach me at D for Dan Frio, Frio, at preferredrate.com. What I ask people to do is, if you have a rate quote right now or you're locked in, send me a copy of your lock or your loan estimate or a fee sheet, something that gives me the loan amount, the term, the fees, the rate, and everything. I'll write on it with a red pen. I'll copy that, scan it back to you and say, okay, here's what I can do. If you'd like to move forward, please, let's get the ball rolling right now. If not, hey, at least you tried. So that's all I ask of you to do. If you would do that, please reach out to me that way. Otherwise, if you would, please don't forget to give me a thumbs up. I greatly appreciate it. I'd love if you'd subscribe down below, click the bell, so every time I do post, you at least get an alert. There's something out there for you. And other than that, God bless, take care, be safe. I'll see you tomorrow.